Thank you for joining me. I'm Alex, and I would like to go over Avis Budget Group, or Avis, or I don't really know how to say that, but they're a car rental company, and I was going to do Hertz, but that video would have been 20 seconds of me just saying no. So their current price is $33, which gives them a market cap of $2.4 billion. Dividend is zero, and considering their financials and their up and down-ishness, I would expect that to stay that way for the reasonable future. Revenue $9.1 billion, earnings of $165 million, which is down from $360-ish million, and that gives them a PE of about 14. Total assets $19.1 billion, total liabilities $18.7 billion, which gives them a total stockholders' equity of $414 million, which is down from 570, I think. I don't quite remember, but down significantly, and it's been in that kind of ballpark for quite a while. And revenue pretty steady, earnings going up and down a bit, but reasonably steady. So, risk factors is the main thing I wanted to make this video for, because I think that Uber does hurt the rental car market a lot. Because why would you rent a car if you can just Uber to where you need to go and then get an Uber back and not pay like $50 a day for a car, which I've had to do. So unless you have quite the commute or something like that, rental cars really aren't that great these days, because Uber, Lyft, and maybe even several others are in the markets pretty much everywhere. So unless you're driving longer distances, Uber is probably going to be cheaper than a rental car. And so that's one major risk factor that car rentals have. The other is going to be electric cars, robotaxis, that kind of thing. Because robotaxis, with the significantly reduced cost per trip, you're going to have even fewer people needing a rental car. And that might even hold true for bigger cars that you generally don't get with Uber unless you pay a different price and, maybe wait longer. So I would think that over the long term, car rentals are going to go away, because at some point, the whole system is not sustainable anymore. They need to have a significant amount of cars for the people who need a rental, and then obviously they need the cars to go to maintenance, go to oil changes, repairs, all that. And so they need to have significantly more cars than customers in peak times. And if more and more people move to Uber or other things, then I don't think car rentals are really going to be around anymore. Maybe in a niche market kind of thing, but, not everywhere like you see them today. So, with that said, and to sum it all up, overall, this company looks decent for a value investor. They have a profit. They've had a profit. Their balance sheet looks, it's not great, but PE is decent. However, with the imminent doom, the whole thing kind of falls apart fairly quickly. So I really don't think that anyone should buy car rental stocks, especially when they perform like this, which does not give them a significant advantage. If the PE was low, the earnings were significantly higher, and the balance sheet looked better, you could maybe make a play for a couple years and try to sell them then. But I don't think it's worth it with these stats. And again, Hertz looks significantly worse. So don't buy the stock. it looks halfway decent, but you can probably find a company with very similar stats that is going to be around for a significantly longer time. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.